Tesla shares opened down 15% after their worst trading day in 5 years. The stock has dropped every week since Chief Executive Elon Musk went to Washington, wiping out more than $700 billion in market value.
Tesla, the electric vehicle maker owned by Elon Musk, is warning the U.S. government that American exporters could be harmed by countries retaliating against tariffs imposed by Donald
Tonight,
Trump.
more turmoil for Tesla. CEO Elon Musk live streaming an all-hands meeting Thursday, trying to reassure his employees as Tesla stock tumbles amid a Tesla takedown protest movement against the company.
Tesla is facing one of its worst crises ever. Stock prices have plummeted 53%, sales in Germany collapsed by 70%, and even top analysts are downgrading the stock. With Trump's tariffs squeezing margins, European consumers turning away, and Chinese EV giants like BYD and NIO gaining ground, Tesla's dominance is under threat. Is Elon Musk's empire crumbling, or can Tesla make a comeback? Stay tuned as we break down what's happening, why Tesla stock is falling, and what's next for the EV giant. Tesla is facing one of the toughest periods in its history, battered by a relentless wave of setbacks. The company, once hailed as the undisputed leader of the EV revolution, is now losing ground fast. A combination of Trump's trade tariffs, Elon Musk's political turbulence in Europe, and a historic collapse in stock value has shattered the company's once unshakable dominance. Tesla's golden era now seems like a distant memory, as both its financial standing and market position in Europe take a massive hit. In recent weeks, Tesla's stock has nosedived, caught in a brutal sell-off triggered by the US-China trade war and Musk's increasingly controversial presence in European politics. Wall Street has responded with a wave of panic selling, with even the US Secretary of Commerce issuing a stark warning that Tesla stock is becoming a dangerous bet. Instead of calming investors, the statement fueled even more uncertainty, pushing shares further into the red. Meanwhile, Tesla's struggles in Europe have intensified, with sales plummeting nearly 70% in Germany over the past 2 months. Market share is eroding rapidly in France and other EU countries, deepening the stock's collapse. Multiple forces are driving Tesla's decline. US trade policies, Musk's political entanglements, an increasingly competitive car market, and European consumers turning away from the brand have all contributed to its downward spiral. Since the beginning of the year, Tesla shares have been in free fall, and while some analysts dismiss it as overblown panic, others warn of deeper structural weaknesses. Rising raw material costs, aggressive competition from Chinese and European automakers, and Musk's unpredictable moves have all combined to weaken both Tesla's market position and its reputation. Even an attempt by the US Secretary of Commerce to boost confidence backfired, accelerating the stock's descent as investors questioned the government's involvement. The numbers paint a grim picture, a staggering 53% drop since the start of the year, with losses of up to 7% in a single day. The trade war's impact has only made matters worse. Trump's tariffs on Europe, Canada, and China have driven Tesla's supply costs higher, while retaliatory tariffs have eaten into international sales. As the company struggles with both economic pressures and political uncertainty, Europe is shaping up to be Tesla's biggest battleground yet. Tesla's troubles in Europe are spiraling, with its dominance in key markets unraveling at an alarming pace. In Germany, Europe's largest auto market, sales collapsed by a staggering 70% in January compared to the same period last year. Model 3 and Model Y deliveries have fallen drastically short of expectations, signaling a major shift in consumer sentiment. The French and Italian press have highlighted a growing backlash against Musk's political antics, with European consumers, highly attuned to environmental and social responsibility, distancing themselves from the brand. Even CBS News points out that while the EV sector is expanding across Europe, Tesla is uniquely bucking the trend, sinking while its competitors surge. But it's not just Musk's Twitter-fueled controversies rattling investors. There's a deeper concern: Tesla's long-term strategy, or rather, the lack of one. The U.S. Secretary of Commerce's Howard Lutnick blunt assessment that Musk's personal politics are entangled with Tesla's business, and that this poses a serious risk to the stock, was the final straw for many. The remark, widely perceived as an official warning, sparked an intensified sell-off, wiping out a jaw-dropping $70 billion in Tesla's market cap between March 14th and 16. Europe, once a major growth engine for Tesla, is now a battleground where its decline is most pronounced. This collapse comes at a time when the competition has never been fiercer. Heavyweights like Volkswagen, Renault, Stellantis, Hyundai, and Kia are aggressively scaling up their EV presence, chipping away at Tesla's once unchallenged dominance. Meanwhile, Musk's clashes with European leaders, his polarizing political stances, and his social media controversies have soured public perception of Tesla, prompting many European consumers to turn away from the brand. And then there are Trump's tariffs, another crushing blow. The U.S. government's protectionist policies are driving up Tesla's logistics and production costs in Europe, straining profit margins and placing the company at a disadvantage against local manufacturers enjoying government incentives. Adding to the pressure, Chinese EV giants like BYD and NIO are making their move. According to Business Insider, Tesla's 53% global sales drop is directly tied to the European market entry of these powerhouses. BYD, in particular, is eyeing an aggressive expansion into EV-friendly markets like Germany and Norway, capitalizing on price advantages and government incentives. While Tesla's Gigafactory in Berlin was supposed to be a game-changer, the pace of its factory investments and model updates appears sluggish in comparison. The market is now questioning whether Tesla's valuation was simply overinflated all along, with some analysts arguing that its recent stock crash is merely a long overdue correction to its real value. For years, Tesla's stock price was fueled by hype, valued not on current profits, but on its future growth potential. But as competition intensifies, that narrative is starting to crack. Legacy automakers and new EV powerhouses are ramping up production, slashing prices, and rapidly eating into Tesla's market share. The sharp decline in Europe is a clear wake-up call. Tesla is no longer the undisputed leader of the EV revolution. Pandemic-related production disruptions, supply chain bottlenecks, and skyrocketing raw material costs have already pressured margins. Now, Musk's political battles and erratic statements are amplifying the crisis, turning an economic problem into a full-blown branding disaster. Internal issues are also raising red flags. A wave of executive departures has fueled concerns about instability at the top. Musk's deep involvement with Twitter continues to spark investor anxiety, reinforcing fears that he's neglecting Tesla at a critical moment. At the Berlin Gigafactory, one of Tesla's biggest bets on European expansion, rumors of missed production targets, labor disputes, and regulatory hurdles are mounting. Musk's frequent clashes with European politicians and institutions only make matters worse, further alienating key stakeholders in a region vital to Tesla's success. The fallout is no longer just about sales. It's a political and corporate governance crisis unfolding in real time. With the next earnings report looming, all eyes are on Tesla's delivery numbers. If the European downturn continues, global sales targets may need to be revised downward. Some speculate Tesla could shift production capacity toward Asia, but even China is no longer a guaranteed stronghold as local competitors like BYD and NIO continue to dominate. Investors are now openly asking, is the Tesla bubble finally bursting? For years, Tesla's valuation was propped up by the argument that it's a tech company, not just an automaker. But now, as revenue stagnates and margins get squeezed, reality is setting in. Adding to the volatility, the U.S. Secretary of Commerce's public remarks urging caution on Tesla stock were widely seen as government overreach, ironically accelerating the sell-off instead of restoring confidence. Tesla has weathered turbulence before, always managing to bounce back thanks to Musk's vision and relentless innovation. But this time, the challenges are multi-layered. Cutthroat competition, a politically charged environment, high interest rates, and Musk's growing disconnect from his core business. Is the Tesla success story breaking down? The company still has potential lifelines, mass production of new battery technology, a full-scale Cybertruck rollout, and damage control on Musk's public image. But for now, the market remains unconvinced. The most alarming signal? Tesla's sales are collapsing even as the overall EV market expands. Consumers aren't turning away from electric cars, they're just turning away from Tesla. While some attribute this to Musk's polarizing persona, others point to more tangible factors: aggressive pricing from competitors, stronger service networks, and Tesla's fading reputation for innovation. The company has attempted to counteract this with price cuts in Europe, but the move backfired. Investors saw it as a desperate measure that eroded profitability rather than restoring demand. In a fiercely competitive market, Tesla is running out of easy wins. For years, Elon Musk's charisma was Tesla's ultimate asset, powering the company through storms, setbacks, and skeptics. But now, with political tensions, trade wars, and Musk's own controversies mounting, that magic seems to be fading. His strained relationships with European leaders are rippling down to consumers, and Trump's escalating tariffs are slamming Tesla's export potential. The stock has taken a massive beating, and analysts are split. Some warn the 53% collapse could deepen, while others argue that this is short-term panic, and a recovery may be on the horizon. The next few months will be critical. Sales data and financial results will reveal whether Tesla is merely weathering a storm or facing a true structural decline. If the European downturn persists and China stumbles, Tesla could be in for a global reckoning. That said, Tesla has always been defined by its ability to innovate and disrupt. A major technological breakthrough, whether in battery tech, AI-driven production, or a game-changing new vehicle, could flip the narrative. But for now, the pressing question is clear. Is Tesla's golden era over? Musk has pulled off stunning turnarounds before, but this time, the threats are stacking up fast. Trump's tariffs, a shrinking customer base in Europe, aggressive competition from legacy and Chinese EV brands, and a fragile global economy are all squeezing Tesla at the same time. Add Musk's Twitter-driven controversies and bizarre investment signals from U.S. officials, and the chaos only intensifies. If Tesla doesn't act strategically, it risks continued image and sales erosion, and deeper stock losses. Another unsettling factor: speculators are moving in. The loss of confidence in Tesla has drawn short sellers looking to profit from volatility, and even institutional investors, once the backbone of Tesla's long-term growth story, are starting to pull out. Major funds are selling shares while others are adopting a cautious wait-and-see stance. If Tesla delivers strong earnings, the momentum could shift back in its favor. But if results disappoint, institutional exits could deepen the sell-off, driving prices even lower. The data paints a sobering picture. Tesla's 53% drop in stock value isn't just a reaction to US and Chinese pressures. Europe has played a central role in this collapse. A 70% nosedive in German sales, weakening demand in France, and the growing disinterest of European consumers in Musk's persona are all compounding the damage. The crash has erased hundreds of billions of dollars in market capitalization, leading institutions like Royal Bank of Canada and Morgan Stanley to downgrade Tesla's outlook. Even the U.S. Secretary of Commerce has publicly warned investors to stay away. On top of it all, Trump's tariffs are making Tesla's supply chain and logistics significantly more expensive, further squeezing margins. The road ahead won't be easy. Tesla must figure out how to win back European buyers, navigate the US-China trade war, and contain Musk's political turbulence if it wants to reclaim its status as an unstoppable force in the EV market. Will Tesla emerge from this crisis stronger, or are we witnessing the fall of an industry giant? Drop your thoughts in the comments, hit like if you found this breakdown insightful, and don't forget to subscribe for more deep dives into the finance world.